Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 28th of July here in 2022, and it's earnings, and more earnings. Let's start with a big one, Apple. We'll talk about three, and there's other earnings on deck. So, tomorrow is Friday, which brings on the weekend. But before we get to that weekend, let's play some earnings. Apple, and what I'll focus on in tonight's video is whether or not, it's not so much whether the company beat or exceeded or missed. It's what the play or what the movement is after hours with respect to the expected move. Question at hand, did it play within the expected move or not? And what's the play into Friday? And if you have positions on, of course, you'll need to look at those earnings per share. But in the purpose of tonight's video, we'll just look at those levels, what the outcome is. And as always, you'll know more information by the time you watch the video and into Friday morning. So let's get started there. Apple had its earnings. Apple, at least in terms of the big three, was the only company to beat or exceed its expectation just by a little. Beat on earnings, beat on revenue, and the stock, quite logically, perhaps, maybe, is up. But is it within the expected move bound? And how do you calculate that expected move boundary? That's right here at the near-term expiration option, and that's going to be 91% implied volatility at the close. That's going to push an expected move, $5.90 up or down. Here is the daily chart. Here's the close of the market. Let's just go $6. Was Apple up $6? Up to the expected move level? Roughly speaking, $6.90. And the answer is absolutely. Expected moves become targets. That's where butterfly type logic can get a good risk control for these type of trades. And you just pick a direction, but the risk is worth the reward if the market goes up to that expected move play. And for Friday's session, if you don't play right ahead of earnings, you can take small intraday trades as the market moves either A, toward one of the two expected move earnings plays, or B, if the market is seen to be at that price level, that can set up an intraday reversal type of trade. So that's what we'll focus on in tonight's video. But on the big three, not so much what it means for the broader market, but about the ending of the earnings and Fed week. And it has been an active week. At the moment, the market's closing at the highs of the week. But before we get there, Apple is up into its expected move play. What about Amazon? Amazon missed. Revenue beat, but lost on the investment. So it depends on the estimate, what you look at there. The estimate, of course, earnings per share. There's little different estimates, but that's what I don't want to focus on that just yet. You're always able to take a look at the post-earnings reports, what the sales figures were, any analyst commentary, or any numbers you're looking at for fundamentals on any of these shares. But there's Amazon, and whether or not they beat, and of course, not just the numbers up front, top-line numbers, what it has to do with anything they say about forward guidance. Amazon shares will ask the same question. Are they up within the boundaries of their earnings-based expected move? It's 155% implied volatility, which gives the stock a $7.80 implied volatility move. Did Amazon play $7.80? This one is going to be a no. This is going to be well beyond its $7 expected move. And in this case, looks like it'll be well beyond the two bounds of that standard or expected move for the earnings play. Amazon is up above that. Currently after hours, and again, you'll know as this is immediately after, within about an hour after the earnings. So you'll have more information and things can change. That's what happened with Microsoft after the video. There were changes and the market was much higher after an initial down move on earnings. But Amazon currently is well above that 130 per share, trades currently at about 138. That puts the stock right back into its trading range at the 140, again split adjusted at the 140 level, and that'll be a key focal or pivot point because it's the downside or the bottom of a volatility box or a little rectangle, just like we see right here with about 126 per share and the important round number reference of 100. All that being said, Amazon has taken a jump above, beating the expected move and trading well beyond where the option volatility market placed that expected move, despite having a 155% implied volatility. Currently, shares are trading double that $7 move, and that is Amazon. Those are the upside moves. Intel, it missed its earnings, missed the revenue at least by a mile, and the stock is falling. Is it falling within the bounds of its expected move? Just at the end of the session. So 170% implied volatility translates into this stock of about $2.70. Where is it on the play? There is 270 right about here. That's about 37, and of course that would go to the upside as well, because it doesn't say a directional edge, it just says a movement up or down of about $2.70. In this case, the Intel shares have gone, there's the 270, again, just looking again, to about the $4.50. So it did hit that level, that's 35, but is currently trading, and that's what's important if you have any butterfly or trades on with respect to the question at hand. Did the stock trade within its expected move? And any positions you have on, was it in the profit zone or outside the profit zone? Intel is right back just at that 37 per share level. And that does have a downtrend in motion. Most stocks have a downtrend. The market itself has a downtrend, and Intel is no different. So we will see that one, assuming there is no major change after hours or in the evening session or pre-market on Friday. We'll see Intel shares down at these lows, again toward that 37 print. So we'll see that stock trade potentially into new lows, down from its falling trend line channel. Those are the earnings after the bell. But a quick note in today's session, just to note some of the differences in the close. This is all day. These are stocks that opened up or at least had earnings before the bell. Comcast, it's up down 9%. Honeywell is up about 3.5%. American Tower, and then Linde, and looking at MasterCard, which is itself in a trading range. TMO, Thermo Fisher Scientific, also a trading range. Just to note those levels, it's a high price stock with not great option liquidity in terms of positioning in here. So it's not a stock that you might be familiar with or trade actively. Bid offer spreads often are too wide, and the liquidity in the option pool is not as high as we would like to see. But nonetheless, it also operates in a sideways trading range. PFE, which is Pfizer, it as well is opening in its trading range, and Pfizer shares have this 55 and about 46, making the midpoint or the fair value about 550. But then there's more. It does not stop. Altria shares were down, or flat, down a little bit, but flat on the session. Volatile session within a stock priced as it is, but there's your earnings, there's your announcement, there's the intraday chart. Merck, the little sell side activity in Merck, just some active trades and active positions we might look at here. We'll take that off. But it is in a bearish position and a bearish range down from 96. And the final stock is Southern Company. And that was a trend into the upside. Southern Company, SO, 3.5% back to its 76 high. Now that is just a quick look, just for the sake of tonight's video, about some of the other stocks that are not named Apple, Amazon, and Intel. In the broader market today, we did close quite a bit higher with a large rally and breakout to the upper bound of the expected move, at least in the SPX. But in the grand market, Meta or Facebook, Comcast, Charter, Pfizer, Merck, other shares, JP Morgan, Bank of America, it wasn't all bullish. In fact, the weakest stocks in today's session were some of the key names, which is Meta, Facebook, Qualcomm, again, earnings there, US Bancorp, American International, AIG, there's Pfizer, Merck, and Intel. Intel was on the weaker side in today's session, and that's before it had its earnings. Stronger stocks, just to be a counterbalance, were Ford, NextEra Energy, American Tower, again, that's before earnings or after earnings, Exelon, Nike, Honeywell, and there is Southern Company. Target is up in the list with Danaher and Simon Property Group. Sector performance, just anything major that jumps out at us from a sector standpoint. In today's session, the strongest grouping or the strongest sector was the smallest, or among the smallest, which is utilities. That was up 3.5%. Behind it was the industrial sector, up 2%. and then mixed from there. Discretionary was up 1.7, and the technology sector, that's the Nasdaq particularly, was up 1.5%, right there with the staples. Weakest sector, and by that I mean stocks that were not up at least 1%. Financials were up 0.75%. Energy was up 0.5%, and again the healthcare sector was up about the same as energy. So a little mixture in today's session, meaning it wasn't all across the board bullish, despite what we see at the index pushing up to new highs. And that is the S&P into 4100, which takes us to our scenario plan, the lower probability, but it did happen, which is the push above this 4,000 into the prior high. And in prior videos, I'd highlighted this potential playing out in a very similar situation to where we were into March, into April, earlier in the year. And that looked like this, with the market into resistance. At that point was 4,400. The prior high was just above 4,500. The probability did favor down. The plays were bearish and to the downside, but the market had one little gasp, and that was a push all the way back very quickly to these highs. That was always the risk of a same thing happening. The reward meaning the pathway lower, did have better favorability. But the market is into that repeat scenario where it has gone above 40 or 4,000 and has gone there quickly. And that's just back to the prior high. Just looking at this from that perspective, it's a similar rally, or bear market rally, if we will, to what we saw going into March and April. If we do start to break above, and let's talk about that, we'll discuss that in future videos, but just give a little hint about that potential. If the market had broken above that pivot, it could have sent the market into a new high. That was not the scenario. The scenario played out with the probabilities, which was down to new lows. That will be the same potential pathway. There's a lower probability that the market will break and continue higher, but probability is real, and we must take that risk into account. The downside does have more play, does have more point values, and will be where we most likely will be focusing on trades. But this is, again, from a perspective of reward and a perspective of risk. The risk would be to the upside on a squeeze play, similar to what we saw into 4,400 to 4,500, and what we just saw from 4,000 into 4,100. Additional risk of a breakout and a push even higher is on the table and must be considered, at least from a hedging or protective or defensive type of standpoint. As always, be careful and safe, as the weekend is upon us. The Fed is behind us. GDP is behind us. Lots of major earnings are behind us, but more to come. This is Corey Rosenlund with tonight's Theo video update for July 28th, 2022.